GTA 6 is the biggest game probably in history for launch. Everyone will only be talking about GTA 6. Everyone will be running their own servers. Right? And there's a possibility that they might even run crypto rails on them, not in terms of the game itself, but basically on those private servers.
Are you afraid of Sandbox become the Game of Thrones of gaming? Like they build up the hype and it's so good at the very beginning, and people are just gonna be like eventually disappointed for whatever the final product's gonna be. Sandbox, that's like one of the major recent news in Web3 gaming. So the co-founder Seb aside, basically just like being
Yeah, so if you read the news, you got a little bit of drama and you got a little bit of sensationalism. So the reality is the founders have not stepped down. I mean, my name is Yat. I'm chairman, co-founder of Animoca Brands. I think most people know us as an investor in the space. We have over 600 portfolio companies, but I would say, we're actually an operating business, very much focused on the alt space, which we should talk about a little bit later, because I don't know how many of you here are Bitcoin maxis, but I have a view on this one, so we could talk about that later as well. But either way, we're basically headquartered in Hong Kong, been really in the space, started originally, I guess, known for Web3 gaming, and I guess the metaverse stuff is what we're known for, but we're much broader than that.
All right. So as a tradition of two, we did two. This is the second one. As a tradition, I want to get like slightly personal with you first. So I know that you just arrived yesterday night
Last night.
Singapore, yeah, and this is probably your first like speaking engagement in Singapore.
No, this is actually my fourth one already.
Fourth, but you said that last night. Okay, so how many do you actually have in Singapore?
What else? So Singapore is good because everything. I was actually just having a chat over there about how efficient Singapore is, because I was just in Korea, and good luck in trying to get 2 or 3 things going there because traffic is terrible when you go from one place to another. Whereas over here, actually, it's really really efficient. So I've been able to go from place to place in 15 to 20 minutes. So between podcasts and between talks and between work presentations, it was all done. And I still have 4 more after this. And I have to say that I'm confident I can do it. Whereas in Korea, it would have been impossible.
Right. And have you actually did the count, like how many like speaking engagement that you did so far this year?
No.
No.
I mean,
easily over 100, right? 200.
I'm not counting. I'm not counting. Okay, but it doesn't really matter to me.
Yeah, well, that's the question I want to ask is like, how do you feeling these days? Because like people ask me the same questions, like, how are you feeling? Are you tired? Are you exhausted with all the? Exactly. I was like, well, look at Yet. Like easily he did triple of what I did, so like I couldn't be complaining if Yet's not complaining. So how are you feeling these days?
I feel great. I feel great. And I'm guessing I'm probably a lot older than you too.
Not a lot, not by a lot. Yeah. By the way, this picture is like from like 7 years ago when I was doing Chanfai.
Yes.
I don't think I aged a bit. So but I'm old.
Yes. My oldest kid's already working.
All right. Okay. Yeah. All right.
But
maybe. Yeah.
my point is that I think it doesn't matter how old you are or whatever. I think it's just if you love what you do, you have energy for it. And I love what I do. So it's pretty simple.
That's true. Okay. So we have to talk about GTA 6. Okay. So for those of you, there's a backstory. So when we were at Tokyo and Dubai just a few months ago, we were at a very similar fireside chat. We talked extensively about GTA 6 and how excited we were to have GTA 6 probably 4 this year right now. And just 2 hours after our fireside chat on the very same day, they delayed it.
Yeah, we jinxed it.
We jinxed it.
Yeah, and then really, I think the context on this was, blockchain gaming, Web3 gaming has had a pretty rough period, but it's not for want of usage. The users inside the blockchain games are actually higher than ever before. So it's been done quite well in terms of actually adoption. What it hasn't done so well is on token pricing, but that has to do with, and I think you can probably empathize with your projects, ones who launch projects, the utility of the asset and the token and the holders of the token aren't necessarily the same audiences, right? And this is true for almost every application, with the exception of things like DeFi, because of the close association with finance. So the ones who are playing games are not necessarily the ones who invest in the token. And so how do you get investor sentiment on the token to improve? It has to do with the macro sentiment. So for instance, when AI tokens do well, AI is a hot topic, AI tokens do well, but it's not necessarily because the fundamentals of the AI projects are higher than, say, ChatGPT or like OpenAI or like Perplexity. It's just the fact that sentiment is positive. Tokens mimic real world sentiment very much the same way, right? So stable coins is the latest hottest draw. So of course, Plasma comes out, boom, everything, right? So it's stuff like that basically just is a reflection of how tokens work. So what is the trigger for gaming to come back? And it would be GTA 6, because GTA 6 is the biggest game probably in history for launch. Everyone will only be talking about GTA 6. Everyone will be running their own servers, right? And there's a possibility that they might even run crypto rails on them, not in terms of the game itself, but basically on those private servers. So, we're very hopeful that it was going to happen in October of this year, because that's what they said 2 hours before. And now they said May. So let's see. But if GTA 6 comes out, then it's great times for, I think, gaming tokens and gaming in general.
By the way, we didn't prep for that, but like that's perfect for my next question. So like you talk about AI a little bit and talk about Web3 gaming a little bit. Do you feel like the last delay of GTA 6 is like they're trying to prep for something last minute to have like AI integration, like AI powered NPC or maybe blockchain integration?
Yeah, so no blockchain integration.
No blockchain.
And so first of all, just to be clear, Take-Two, which is the owner of Rockstar that basically developed GTA 6, sort of Strauss Zelnick has not, he's not a fan of crypto. So just to be clear. However, what's different is that when you run GTA, you can run this thing called RP servers, right? And so you can run your own server, which is actually how those games continue to run. Like if you think about like what, the biggest games in the world, Roblox, Minecraft, and GTA, right? They actually exist. Yeah, they actually exist because users are running their own servers. They're modding their own communities, right? But they had previously banned crypto. But the reason why you ban crypto isn't because they didn't necessarily like the speculation. Of course, there's a concern around that. But in the US, the climate was so hostile that it didn't make sense for any US company to say it's okay to run crypto rails, right? It's very dangerous to do that under the previous administration. But under the new administration, it can be much more relaxed. And I think the real proof is when sort of the Markets Act, Clarity, if that gets approved, then I can think you can expect a lot more positive sentiment in tokens in general, because then larger companies can easily say, okay, here's how we tokenize without having to worry that the rules will change after the next administration, right? So just like stablecoins now is fair game for everyone because it's law, they have to basically get general rules as to what is a utility token and what is a security. Like all these questions need to be clarified, which we believe will happen very quickly because everyone's trying to push that through, certainly before the midterms next year, right? So I think that's one driver, and so GTA 6 will be launching in a much more friendlier environment, which we think will be a big driver. Yeah.
Okay, so with the risk of making us the public enemy number one, would you like to say it on record? Are we actually going to see GTA 6 next May or 2026 at all?
Yeah. So first, okay. So I've just back to the question: why was there a delay? Obviously, they're being perfectionist about it. But the other thing is that what Take-Two has done is there's been a lot of new patents that they've applied to, which is visible in a patent record around AI. So that there's a lot of very deep, interesting AI integrations happening with GTA 6. But there's a couple issues which I think will be solved. So first, the cost of running an LLM and the cost of running essentially an NPC-style AI gaming system is very expensive, certainly 6 months ago. That cost is constantly coming down, 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 right? So by the time it launches, because remember, the business model of Take-Two on this one is still to pay for a one-off fee and then for basically upgrade packs. It's not like a subscription fee in the classical sense, right? So the running cost of that becomes expensive. So they have to figure out how to do that. I think that's part of it. Otherwise, the AI is quite dumb. It's the reason why gaming AIs tend to be quite primitive, comparatively speaking. But I do believe that they have to release next year, because if it delays more and more, remember, this is a game that's been in expectation for 8 years, okay? So it'll be 9 years next year. So if it doesn't come out next year, I think it's going to have an impact on the stock price. So that's why I think, the markets, at the end of the day, markets move everything, right? So if the share price starts to wobble because people are like, it's never going to happen, then they're probably going to have to react.
Okay, well, hope that we don't jinx it and we can actually talk about GTA 6 at Token Dubai next year, May, right?
Look for it, yes.
Yeah. Okay. Enough about like Web2 gaming. Let's switch to Web3 gaming. Sandbox. That's like one of the major recent news in Web3 gamings. So the co-founder Seb Asai, like Seb, like basically just like being a
Yeah, so if you read the news, you got a little bit of drama and you got a little bit of sensationalism. So the reality is the founders have not stepped down. They are
Sorry, Seb Asai.
stepped aside. They're in new roles. We couldn't talk about it, but the announcement will be held here in 2 days, October 1. So all I can say is stay tuned October 1 for a big announcement around basically, Sand and the future of basically what Seb and the guys are doing. That's all I can really say. And I think when the news came out earlier, it was really sort of taken it from a sensational perspective. And because we couldn't say anything because we're preparing for it, it sort of let the course run. So it's an interesting lesson there. That said, we're very excited. So stay tuned for 2 days from now.
Yeah, but like, so Sandbox is still, if not the biggest metaverse Web3 gaming brands around in our industry, right? Do you feel like what you're doing, about to do, by the way, in 2 days' time, about to do or doing, would be like how the industry perceiving it, and whether or not it's like a general net positive?
I do want to make a distinction. So there's Web3 gaming, and then there's, I guess, what we classically call the metaverse. So metaverse expands beyond gaming, and really, in the case of Sandbox, is around supporting creators in the creator economy. So you can expect something in that direction, right? Because essentially it's how do I create something and then essentially sell it virtually, offer services, which was part of what the metaverse experience was, part of a gamification, but it's not just that, right? Now, when it comes to the classical blockchain Web3 gaming side, you have a lot more game titles out there. And it mimics a lot what traditional gaming is as well, which is that it is somewhat of a hits-driven business. It either does well or it doesn't, right?
Yeah.
And so there's those that last or do well, and there's others that don't. So, like you only hear about the big games that work, but you don't hear about all the other games that don't work, right? And in a blockchain, it's kind of the same thing. There's one difference though. The game doesn't have to be that big. So for instance, if you look at something like Axie Infinity, actually Axie is doing quite well, right? And the Ronin chain, which just rolled up into an L2, is actually doing quite well. The only thing is that they don't have 100 million users. And you don't need that because the liquidity, the actual ARPU, the value per user is much higher in blockchain gaming, right? So I do think that more indie gamers will eventually move in that direction. And of course, in Asia, if you look at Nexon, what they did with MapleStory, they basically launched one of the oldest gaming brands into a fairly successful multi-million user type of Web3 gaming experience. So it's all beginning. It's just more happening in this part of the world than it's happening in the West.
Right. And I like this analogy, and I talked to one of our mutual friends on it. No names here. But are you afraid of Sandbox become the Game of Thrones of gaming? Like they build up the hype, and it's so good at the very beginning, and people are just gonna be like eventually disappointed for whatever the final product's gonna be, and it's not gonna be finished.
So no, I don't think so. But the reason why I don't think so, I think you have everything goes through hype cycles, right? But the hype isn't what you measure it against. You measure it against the utility. So for instance, take NFTs. So a lot of people who have seen the NFT hype might say, oh, NFTs are gone. But NFT sales is still $500 million to 600 million a month, right? So it's just not as hyped as it was before, but it's still fundamentally there, right? And when you look at all of the actual ecosystems as well, whether we go through L1, L2s, whether you go through DeFi, whether you go through all these cycles, actually there's still utility in them and people use it. It's just people don't talk about it the way that they did before, right? That's all. So for instance, like Roblox and Minecraft are the two biggest games in the world. They had a hype. People don't talk about it much anymore, but Roblox has 380 million users. I mean, so to me, it's about like, is a product generating revenue? Is there actual implicit growth? And I think where the hype comes in is where people who are outside, who actually don't have a usage in the application, and they hear about it, but they don't look about it. I mean, look at Bitcoin. Bitcoin went through multiple hype cycles as they went through, right? At the end of the day, do people talk about Bitcoin the same way they did 6 months or 1 year ago? Not really, I would say. It's important. Everyone knows it's an important asset, but we've moved on to other narratives. That doesn't mean Bitcoin is worth less. Do we still believe Bitcoin is going to be worth $1 million in the future? Yes, right? But that doesn't mean that it's the center of every conversation, right?
Okay, we can't go a panel without talking about RWA this year. And by the way, for the record, I hate the terms like real world asset. Like what it feels like that whatever we're doing is not real world. But the fact is, like, we're as real world as it gets, right? But do you feel like there's some? We're talking narrative and everything, but like, do you feel like that in a year or two, that's like something that we can tokenize in real world that we're not talking about it right now? This is like some new ideas should be coming up in a year or two.
Yeah. So first, let me just address the real world part.
Yep.
Because I think a lot of people who are outside of crypto often look at, oh, look, but this is a building I can touch, I can see, and all that kind of stuff, right? Even if the rights of the property are actually a contract right, which is virtual, right? But I would say the largest asset class that we have today that's emerged over the last decades is intellectual property, trademarks and patents. And these are entirely virtual, right? And so when we speak about RWAs, we don't necessarily only mean taking gold or taking state with like dollars. That's one way. But it's actually taking the kind of things that exist in the classical world, such as intellectual property rights, royalties of music, that type of stuff, and then you tokenize them to expand the network and create a wider audience, right? And the reason why RWAs are exciting is because it basically bridges in the TradFi world into it, right? Which is a way for them to understand it. It's very difficult for someone who's not in crypto to appreciate Bitcoin, Ethereum, or basically the network value and the network effects that tokens represent. But it's much easier for them to understand what a building is worth and how that could expand in value if there's more buying demand because there's more tokenized holders, so to speak, right? So it's a way to educate people about it. So I think of RWAs as the next level of education for people to say, oh, okay, I can tokenize my asset. That's what it means. But ultimately, the expansion comes from tokenizing things that actually are already there, but could never have a means of ownership. So what I'm very excited about, for instance, is, we're seeing this a little bit in crypto through the form of the mass tokenization, which is attention. So the attention economy is driven by advertising.
Yep.
Advertising is $1.1 trillion a year, of which about 80% is online advertising. And that's an example of something that companies like Google and Facebook make a ton of money on, and is the basically reason why they're worth trillions. But we as users could never own a piece of that. And through tokenization, you could potentially own that now because you could own a piece of that network, right? So those are areas of expansion that will become much more common, sort of common-based, right? So basically mass tokenization. So my mental model is like websites. So for those of you old enough, you might remember we used to have websites back. I mean, we still have websites, but websites back in the early days of the web. And then we expanded the websites paradigm in social media by having Instagram, TikTok, LinkedIn. To me, each of these are also a website, right? Actually in the original construction, right? So it's a form of presence and attention. That means you have now something like, as an individual, you might have at least 5, maybe 10 websites, maybe 15 websites, right? And now actually you have a way of owning those networks, those network states, basically through a token. So by that measure, we're going to have billions of tokens, right? And that basically means everything is tokenizable from an attention standpoint, from a proof standpoint, because even likes and follows should be tokenized. And I don't mean it in a sense that you want to have value for trade. I mean, that could be one element. It's you need to have something at stake. The reason why you can sort of fake followers and fake likes is because there's nothing at stake, or it's very, very, it's very cheap, right? And so the having a lot of followers doesn't mean as much as it should, because there's no true cost attached to it. And that's essentially what blockchain can enable.
Okay. And on the flip side, do you think that's anything that we should not be tokenizing at all in the future? And like, just because it's like highly immoral, like tokenizing your privacy or your data for the AI training models, etc. Is it something that's just like
tokenizing data to me is a very common thing. And I actually think the value of tokenizing your data to own the derivative effects is going to be very important for the future of mankind, because AI is going to extract value from everything and you need to have a stake in that. But if there's things that we don't want to tokenize, we certainly don't want to tokenize sort of core ethics and values and sort of governance, shall we say, right? So meaning you shouldn't be, because what happens when you tokenize it, you turn it into a capital asset. When you turn it into a capital asset, you essentially introduce financification and money. And the moment you introduce money, you have the ability to essentially corrupt something as well, right? So in other words, we shouldn't be able to buy our elections, for instance, right? We shouldn't be able to, you know, I mean, it's not happening. It's well, I mean, that's a different topic. Yes, it's already happening, but is it a good thing? Is a question, right? And so there's elements and institutions that are put into place to sort of not allow that. There are things in life that money can't and shouldn't buy, right? And so there are elements of this. For instance, you can have a lot of respect and a lot of value and sort of actually a lot of reputation without necessarily implying that you have to be very rich, right? So again, these are elements that probably you shouldn't have to tokenize. I think tokenization as proof, but then trading them is a different element, right? So meaning you can, like, I think tokenization can mean many things. So if it's like something like soulbound, then that's just proof. I think that's okay for certain things. But if you want to be able to trade it all the time, I do think we have to be mindful of the capital construction.
All right. Yeah. So just earlier we talked about stablecoin a little bit. We mentioned about it, and like a few years ago, I think that's quite natural. Like I thought all the stablecoin and layer one and exchange should have a consolidation. We should see less than before, but now we have like more than ever. Like we bet at that as well. We have our own stablecoin and we have our own like layer one, layer two. Doesn't matter. But like, do you feel like the market is quite fragmented right now? Is it going to be like beneficial for the whole ecosystem to have it?
Yeah, I
like
mean, I think
this?
it's, again, you look at it in cycles. There's going to be a ton of stablecoins coming out, and then there's going to be some consolidation. But I think some of the consolidation that's going to happen will come at the application layer. So take Hong Kong as an example. Hong Kong has 3 note issuing banks: Bank of China, Standard Chartered, which is our joint venture partner, and HSBC, right? The user who uses the currency does not care who the issuer is. He just pays $100, whatever, right? And so everyone just accepts it, right? So at the end of the day, I think that's what's going to happen with stablecoins too. So your wallet or your application is just going to accept basically authorized stablecoins that are licensed, for example. And then whether it's $1 from Gate or $1 from Tether or $1 from Circle, they're just going to accept it as $1. They don't really care, right? What you do with the treasury on the back, because stablecoins for a lot of those institutions are basically savings programs. That's the way I look at it, right? It's like if you have billions of dollars of assets and you are able to tokenize them into a stablecoin, you can create utility and they basically become the reserve asset. Why not do that? That makes absolute sense for them to do, right? So if it's licensed, it's okay. Like if I'm sitting on $1 billion in cash, do I just sit it there or do I make it into stablecoin? Why not? If you can basically have the legislative approach, right? And if I'm buying more T-bills, good for the US government, right? So sure, everyone wins apparently. But I think the framing is that the user wouldn't care, right? So there's a point where the scale doesn't matter anymore, because the other thing is you need depth, you need liquidity. So naturally you'll have a shakeout because those stablecoins that can only provide, I don't know, millions of dollars of liquidity, there's no point. The loss, the impermanent loss, the trading loss is just too high. They can't sustain that, right? So that means you basically have to have sort of stablecoins with large volume, large liquidity. So naturally there'll be a crowding out of that as a result, right? So I think that's just going to happen. But the user is not going to care in the future what stablecoin he's using. He's just going to have $1 from that perspective, right? But I think what I do think it's important is sovereignty. So any nation that is not thinking about a stablecoin is going to be dollar colonized, right? And the construct is very similar to, look at what happened to Europe. Europe is completely colonized by American tech. Facebook, Google, Microsoft, Apple. I mean, seriously, right? I mean, they own Europe from a tech platform, right? Pretty much. And so that's what's going to happen with currencies around the world. So if you don't have an answer towards that, then actually other nations are basically just going to be subsumed by that economy, right? And you see this happening in Africa, in Southeast Asia. These are all dollarized economies now. You have 150 to 200 million people more in the world using a dollar because of a stable coin, right? Which means America then has a continued license to print more money and tax a few 100 million more people around the world. And that's basically why stablecoins are so important, right? So other countries in the world have to answer with their own stablecoins or some mechanism. Otherwise, they become dollar colonized.
All right, cool. Another trend is like what we see this cycle is everyone is launching their own tokens. Like even for platforms that they don't like historically don't have their own tokens for the last few cycles, they launching their own tokens. Now, from like more like a investment perspective, because Animoca Brands like back on investment, but on both equities and tokens as well, right? If I'm
Yes,
correct.
yes.
So, but like, why would people would go down to the route to invest in equities if they have the token options and it's much more liquid.
So,
Like the
yeah.
lockup is more questionable.
So a couple things. One, tokens are proxies for network states and network effects. So what we mean by that is that if you tokenize something or you launch a token, the product isn't necessarily a representation of your equity. They're totally two different things. So Animoca has its own tokens, then we have our own equity. Equity is a construct of the profit of the business, shareholding, it's a security. Tokens represent the network and the network effects from them. So even if you take a stable coin, if you take a stable coin and you tokenize a stable coin, you tokenize dollar into a stable coin, you expand the network effect. You make it broader and more powerful as a result. That's an effect that you can have. But that doesn't mean that you're changing the underlying value of the dollar, right? The dollar is still a dollar. That doesn't change, but the reach is larger. And for some of them, that's a way of which you can calculate the brand equity, the marketing, the attention. And that's basically one way to look at how token values form, right? So it may make sense for companies to launch a token for that reason. The other thing is tokenizing assets that, like for instance, gaming assets. Why it's exciting is because gaming, sort of digital gaming worlds actually have an assetizable quantum, but they weren't possible before until blockchain. So the virtual currencies, the skins, I mean, we spend $100 billion a year on gaming skins. Those are assets that you could have, right? So they should be tokenized. But before, it was very hard to do that because you had to trust the database, you had to press the structure, there was no law for it. Blockchain basically covers that. And I think it expands the IP range. But I would say, broadly speaking, altcoins, or as Bitcoiners like to call it, shitcoins, right? Depending on who you're talking to, right? To us, those are going to be collectively much larger than Bitcoin. Okay. Now, today, that's not true, right? Bitcoin's about 2.3, 2.4 trillion, maybe 2.2, depending on which day you look at. Altcoins is anywhere from 1 to 1.4 trillion. So it's actually half of Bitcoin, right? However, gold, right? Gold was that too. Up until the gold standard dropped, basically after the Nixon era, gold was the single largest asset and probably overall the largest asset. And today, gold at 24 trillion is really big, but it's about 20% of global assets worldwide. And it's roughly 6 to 7 times smaller than the global stock exchange market, meaning Apple or Facebook, Google, as individual companies are not going to be larger than gold, right? However, when you look at it collectively, the S&P 500 is roughly 2-3 times the value of gold. And why? Because who's growing the market? Who's creating innovation? Where's technology being built? Who's using it? Where are you expanding the market? So Bitcoin is important as a store of value because it's essentially the crypto savings bank, right? You make money on an altcoin, you put some money in Bitcoin, right? But then you keep trading back into it and you then do other stuff because essentially that's your savings account. So Bitcoin will always rise. However, the rest of the ecosystem as a whole will increase more. So we're very bullish altcoins, but because there's billions, it's hard to know which ones you want to pick. That's a different topic for another time. However, that's basically, how we think of it, right? And so we're very bullish altcoins broadly.
All right. Well, we still have time for one more questions. Yeah, it's just gonna wrap it up. Okay. So we talked about a lot of things. So GTA, Sandbox, fermentation, RWA, everything. It's kind of feel like everything's about this. It's like trend, narrative, cycle, super cycle. To wrap up this Fireside Chat, do you feel like there's something that we should talk about as the industry as a whole, but transcends cycle? We should talk about this for like the next 5 years. But we are not talking about it enough in this like setting.
Yes, I would say the most important thing we should talk about is financial literacy. So financial literacy is, if you remember, those who are old enough, we used to have this thing called digital literacy. As in, how do I use the internet? I use email, right? That sounds crazy for all of us here.
Yeah.
But for people in my generation, that's what we had. We had digital literacy. Anyone who was not digitally literate basically was out of business.
Yeah.
Right? Whether you're a media company, tech company, whatever company, if you were not on the internet, you were screwed. Okay. And so what happens when you tokenize something, when you're blockchain, everything is finance, financification of everything. So meaning there's not going to be a fintech world. It's not going to be your fintech, you're not fintech. Everything is fintech. Just like it's not going to be your AI, you're not AI. Everything's AI. And just like internet, It's not your internet or he's not internet. Everything's internet, right? So we're going to a world where everything is basically financified. And that means financial literacy is going to be in the billions, which means liquidity is higher, financial knowledge is higher, everything's better. Now, what does it mean for us? It means we have to prepare for a world where we have to be ready for a world where everyone has some financial knowledge and how you participate in that. And I think also the impact for you as a business is that if you're not becoming financially literate yourself using blockchain primitives or other forms, then you will be out of business for someone who knows finance better than you, right? So think about it. If you're a game, just go back to Web3 gaming. In the future, if you're a Web3 game and you can tokenize your assets and you can create revenue from essentially your tokenized assets and your competitor cannot, guess who's going to win, right? I mean, look at the sizes of crypto exchanges versus traditional exchanges from a much smaller market base, right? There's only about 500 million people who trade crypto, but we're going to be billions of them. Those crypto exchanges are going to be significantly larger than the New York Stock Exchange and any stock exchange around the world because one of them understands it better than the other. That's just one example, but every business, doesn't matter if you're in industries or whatever sort. So fintech will be democratized and basically accessible to all.
All right. So, well, thank you very much, Yat. This is only the fourth speaking engagement on the first day of Singapore Token Week. I'm sure you guys will see a lot of more of Yat this week. So everyone give it up to Yat Siu, please. Thank you.